Hi, welcome to our web class. This is your FABM1 for your Module 5 or Week 5 topic. So at the end of this lesson, you will be able to illustrate the format of a general and special journals, and also you will be able to illustrate the format of a general and subsidiary ledger. So this is the content map for a topic. We have the two major types of books of accounts, the journal and the ledger. For journal, it could be general journal and special journal. For ledger, it could be general ledger and subsidiary ledger. So there are four types of special journal. We have cash receipts journal, cash payment journal, sales journal, and purchase journal. So journal, the companies initially record transactions and events in chronological order. So it is the order in which they occur. So the journal is referred to as the book of original entry. So for each transaction, the journal shows the debit and credit effects on specific accounts. So again, there are two types of journal. We have general journal and special journal. So first, we will discuss general journal. The general journal is the most basic journal. So typically, a general journal has spaces for dates, account titles, and explanations, references, and two amount columns. So the journal makes several significant contributions to the recording process. So it discloses in one place the complete effects of a transaction. It provides a chronological record of transactions. It helps to prevent or locate errors because the debit and credit amounts for each entry can be easily compared. So we will have a presentation or example of a general journal. So entering transaction data in the journal. So this is the sample of general journal. So again, entering transaction data in the journal is known as journalizing. So companies make a separate journal entries for each transaction. So a complete entry, journal entry consists of, we have the date of the transaction, this one, which is entered in the date column. Next, we have the brief explanation of the transaction, which appears on the line below the credit, this one. So this is the debit account title, the credit account title, the debit amount, the credit amount. Then this is for the explanation. So there is a space, so a space is left between journal entries. So the blank space separates individual journal entries and makes the entire journal easier to read. So the column, the titled reference, this one, which stands for reference, which is left blank when the journal entry is made. So you don't have to write anything here. This column is used later when the journal entries are transferred to the ledger account. So here, the debit account title, so that is the account to be debited, which is entered first at the extreme left margin of the column headed account titles and explanation. So the amount of the debit is recorded in the debit column. So the credit account title, that is the account to be credited, this one. So this part entered on the next line in the column headed account titles and explanation. So the amount of the credit is recorded in the credit column. This one, this is the credit column. So again, the journal entry should contain the date, the account titles and explanation, the posting reference, the debit column, and the credit column. So next slide will be the sample of a general journal. So this one. So here is the example. To illustrate the recording of transactions in the general journal, let us use the following transaction as an example. So August 21, 2020, Mr. J. Pax invested 500,000 in a coffee shop business. So date for the year 2020, you can have August 21 here. You don't have to copy the year. So just put it here below the date. Okay, so August 21. So debit cash 500,000 and credit JPAX capital 500,000. And for your explanation, this is initial investment. Or you can write here hashtag to record initial investment. Next, for August 30, 2020, purchased equipment for his business amounting to 100,000 by cash. So you write the date here, August 30. So debit account, we have equipment, credit, cash. Explanation is to purchase equipment for cash at the amount of 100,000. Okay, so next, September 6, 2020 started his operations and made a sales for that day amounting to 20,000 pesos. So, debit cash since you received sales cash. So, credit sales. Okay, so amount of 20,000. You receive cash out from your sales. So some entries involve only two accounts, just like the previous example. So one debit and one credit. So an entry like that is considered a simple entry. So some transactions, however, require more than two accounts, just like this one. So in generalizing for two accounts, so the entry requires here three accounts also. So all the transactions in the previous example are simple entries. So an example of compound entry is this one. So in December 25, 2020, Mr. J. Pax purchased furniture costing 80,000 pesos. He pays 30,000 pesos cash and agrees to pay the remaining 50,000 pesos on account to be paid later. So the compound entry is as follows. So date, when was the transaction happened or occur? So we have December 25. So he purchased furniture. So the asset here is furniture and fixtures. So costing 80,000 pesos. So you write it here in the debit amount, 80,000 pesos, because this is the amount of the furnitures and fixtures procured or purchased. So you pay 30,000 pesos cash and you agree to pay the remaining 50,000. So it's on account. That is your accounts payable worth 50,000. Your explanation is both furniture by paying cash and the balance on account. So as you can see, the debit here totaled 80,000 pesos and the credit still totaled at 80,000 pesos. So it should be balanced. Debit must be always equal to credit. So we are now in the special journal. So this is one of the types of special journal, the cash receipt journal. So some businesses encounter voluminous quantities of similar and recurring transactions, which may create congestion if these transactions are recorded repeatedly in a single day or a month in the general journal. So these journals are used to record specific types of high volume information that would otherwise be recorded in and overwhelm the general ledger. So take the case of, for example, for the previous slide, Mr. JPAX will record the sales per day using the OR or the official receipt or cash sales invoice issued. So it would be unnecessary and impractical to credit sales account repeatedly, right? So in order to facilitate efficient and practical recording of similar and recurring transactions, a special journal is used. Okay, so first, excuse me. So this is one of commonly used special journal, the cash receipt journal. So cash receipt journal is used to record all cash that has been received. Okay, so the cash receipt journal is used to record transaction involving receipt or collection of cash. So the source document for this journal is the official receipts for service or cash receipts issued by the business. So SI or sales invoice for goods. Okay, so the following illustrate the format of cash receipt journal. So first, the date of the transaction is entered into the date column. Okay, so entries that affect control accounts are posted daily to the subsidiary ledger account. So we will discuss later about this one. Next, a brief explanation. So it's very important. A brief explanation of the transaction is entered into the description column. Okay? So the column ref here, titled ref here, which stands for reference, which is left blank when the journal entry is made. So this column is used later when the journal entries are transferred to the ledger accounts. So here the debit cash column represents the amount of cash received for a particular transaction. Then we have here um, major categories of receipts such as cash sales, um, collection of accounts receivable are provided with separate columns. So these transactions are frequent and repeated items. So therefore, a separate column is provided. So the column here, this one, the column sundry is used for various miscellaneous and less regular items such as capital investment, this one, capital investment, receipt of loan proceeds, among others. So the column totals, this one, so the column totals are posted at the end of the period to the general ledger account. So we will discuss the general ledger and the subsidiary ledger later on. Next, we have cash disbursement journal. So this is used to record all transactions involving cash payments. So the cash disbursement journal is the opposite of the cash receipt journal. So it is a journal where all cash payments are recorded. So the source documents used to update this journal are the check voucher or cash voucher, cash receipts or official receipts from suppliers or vendors. So here, the following illustrate the format of a cash disbursement journal. So there is a date column here when the transaction happened. We have here the check number for your tracking purposes. So account, this one, the reference. So this one is left blank when the journal entry is made, right? So this column is used later when the journal entries are transferred to the ledger accounts. So here, you have here the accounts payable and purchases discount, if any. So for example, for March 1, you have paid 1,200 pesos. Okay, you pay in cash 1,200 pesos for the rent. On March 10, you paid 400 pesos for the utilities. So utilities, it could be water or electricity. And for the supplies, it could be office supplies. So you purchase office supplies. This one, Smith Brothers and Dandy One. So it could be your you paid for your accounts payable worth 900 pesos and 800 pesos. So don't be confused here. For example, last March 20, you pay 900 pesos. You have a payable at the amount of 900 pesos to Smith Brothers. But since you have a purchase discount worth 18 pesos, then the cash you gave or you paid is only 882 pesos. So remember, for cash receipt journal, you are recording all the cash you received. And this one, all the cash you disburse or you pay. Okay? So another special journal we have here, sales journal, or what we call sales on account journal. So this is used to record all sales on credit. Okay? On credit or on account. So the sales journal or sales on account journal is used in recording several sales transaction on account, meaning all the sales you have, you did not receive cash, but instead the customer or your client promised to pay for that service or for the goods you sold. Okay, so you have accounts receivable here, not cash. Okay, again, sales journal or sales on account journal. Same with the other journal, it must have a date column, the invoice, okay, customer account debited, this one. So these are the people that will pay you of the service rendered or the goods sold. The reference, okay, you have here accounts receivable, not cash, because cash is for the cash receipt journal. This is for on account, meaning all you have rendered service, all I mean service rendered, and all the goods you sold are on accounts receivable. So for example, you have here hardware sales, plumbing sales, wire sales, sales tax payable. So these are your credit account. Okay? So accounts receivable, debit, because this is an asset. So you have a 1,000 receivable from Mr. Smith since he purchased 200 pesos for hardware, 700 plumbing, 40 wire, and inclusion of sales tax payable. So the total is 1,000 pesos. So you have a receivable of 1,000 pesos. So same with the other. So here March 29. So you have a customer, or really you have rendered a service worth 1,000 pesos. Oh, no, you have your salesman. So you have given sales worth 940 pesos, inclusive of 60 plus 60 sales tax payable, a total of 1,000 pesos accounts receivable. So in your book, this is your accounts receivable, and in the book of the customer, this is their accounts payable. Next, we have purchase journal. So this is the last type of special journal. Purchase journal or purchase on account journal. So this is used to record all purchases of inventory on credit or on account. So the purchase journal or the purchase on account journal is used to record recurring transactions of purchases on account, meaning you purchase something but you did not pay cash. You are the one who promised to pay on some other days. Okay, the source document for purchase journal are the invoices from the supplier of the company. So the following illustrate the format of a purchase journal. Same with the other, you have a date column, supplier account credited, then the one, so you have to pay for your purchases 800 pesos. So this is your accounts payable. And for supply house, you purchase supplies worth 200 but you didn't pay cash right away. So you have accounts payable of 200 pesos. So next we have here the general ledger. So let's define first ledger. Okay, this refers to the accounting book in which the accounts and the related amounts as recorded in the journal are posted periodically. So the ledger is also called the book of final entry. If journal is the book of the original entry, ledger is the book of final entry, because all the balances in the ledger are used in the preparation of financial statements. So this is also referred as the T account because the basic form of a ledger is like the letter T. Remember this one, just like this one. Okay, for your ledger. So we have here example of general ledger. So general ledger, commonly referred by accounting professional as GL. Okay, this one, GL. They call it as GL, not general ledger. But it refers to the general ledger. Okay, so this is a grouping of all accounts used in the preparation of financial statements. So the GL is a controlling account because it summarizes all the activities that have taken place as recorded in its subsidiary ledger. So this is the format of a general ledger. Okay, so you have here journal or GL, date. This is your first journal. Okay, the date August 21. Then you invested JPAS invested capital worth 500,000, and So you have an asset of cash 500,000 pesos. So to post it to the general ledger, okay, you separate cash and ledger. Okay, for cash, August 21, you have initial investment here, 500,000 pesos. Another account title JPAX Capital, this one account title cash. So you create a T account, or you create a separate account for every account title. So here, cash, for the transaction, the Journal Journal August 21, cash, you have here 500,000 pesos. And JPAX Capital initial investment, 500,000 pesos. So the account portion here, this one, the account portion here, sorry, this one. So we have here cash. So this refers to the account title, cash, JPAX Capital, or you can have accounts receivable. And the account number is an assigned number for each account title to facilitate ease in recording and cross-referencing. So the date column identifies when the transaction happened. The item represents the source journal and the nature of the transactions. The reference, okay, so the reference identifies the page number of um, the general or the special journal from which the information was taken. The debit and the credit columns are used in recording the amount of transaction from the general journal or special journal. So this is your general journal. So you cannot make general ledger, you cannot post a general ledger without the general journal. What else? So the balance, you can have here the balance, okay? So after considering the debit and credit account, so if the running balance amount is positive, then the account has a debit balance. Whereas if it has a negative running balance, the account has a credit balance. So posting, so have you heard about posting? Okay, so posting is the process of transferring information from the journal to the ledger. So what we are doing here is posting. So we have account here, cash and JPAX Capital of General Journal. We post it to the general ledger. We transfer here the cash, then the capital, we post it here to the general ledger. So debits in the journal are now correspondingly posted as debits in the ledger. Okay, this one, the debit here is posting to the debit in the ledger with the account cash. The credit here, 500,000, is posted to the credit column of the general ledger. So from the journal, this one, copy the date of the transaction to the ledger. So you copied it here, August 21, August 21. And under the journal reference, this one, under the journal reference, so copy the page number of the journal. So if this is the page 1, can you see here? So this is a general journal. So this one, okay, journal, this is journal reference, okay, journal, J stands for journal, and page 1. So that's why it has J1. Okay, under the debit column in the ledger, transfer the debit amount from the journal. So this one, 500,000 debit, 500,000 debit. So under the credit column in the ledger, transfer the credit amount from the journal. This is from the journal, 500,000. You transfer it to the general ledger, 500,000. So after posting the amount to the ledger, write the account number in the posting reference column on the journal. So if you remember, during the journalizing, we leave this blank because we can only write here after we post the transaction to the general ledger. Okay? So look at this one. This one, the general ledger account title cash has an account number 110. So where did you post it? So this is the posting reference. So 110. This one, account number 310 for the capital. So you write it here. Okay? Next, we have subsidiary ledger. So a subsidiary ledger is a group of like accounts that contains the independent data of a specific general ledger. So a subsidiary ledger is created or maintained if individualized data is needed for a specific general ledger account. So an example of subsidiary ledger is the individual record of various payables to suppliers. So the total amount of the subsidiary ledgers should excuse me, equal the balance in the accounts payable general ledger. So an example of accounts payable subsidiary ledger is here. So the upper portion, this one indicates the name of the vendor or the supplier. This one. So for accounts payable, you have a separate account for this. You have accounts payable for DND, you have another accounts payable for to BSA, another accounts payable to Dojan. So the vendor number here, the vendor number is an assigned number for each vendor as reference in keeping the records of a supplier. So you have it here. Then the date column, this one identifies when the transaction happened. The description column here, okay, so it describes the nature of the transaction. So the reference, this one, identifies the page number of the general journal or special journal from which the information was taken. So this one is PJ44. This taken on the journal 44. Okay, this one, purchase journal. This is from the cash disbursement journal. Here, the debit and the credit column. So this reflect the various effects of every transaction to the record of the supplier or the vendor. So the balance column, this one, the balance column. Okay, so it provides the running balance of every supplier. So take note that the total running balance for all subsidiary ledgers should equal the accounts payable general ledger. Okay, so the purpose of keeping subsidiary ledger is for accuracy and efficiency. So they aid us in keeping accurate records. So since the total of a certain subsidiary ledger must agree with the balance shown in the ledger account, this system helps us find mistakes. So it provides an internal control over record keeping. So today, computerized accounting information systems use the same method to store and total amounts, but it takes a lot less time. Okay, that's all for this topic. Thank you so much.